Hi, everyone. Good evening. As you would have figured by now, we are new to Twitter Spaces. We had been on Clubhouse all this while. We're making our debut here. As some of you may have uh, been a part of our show earlier, The Rundown by ETtech, we are now in season 2. We wanted to experiment this out with Twitter, and hopefully, this will be fun. The first 10 minutes haven't. But for everyone new out here, I'll just quickly introduce myself and my co hosts and a little bit about the show that we do every Thursday. I'm Samidha Sharma, and I'm the editor of ETtech. It's a cross media platform across print and digital news. We cover all things technology. We started the rundown back in March this year to basically cover important themes in tech startups with some of the most influential names. But we wanted to do it in a casual setting, unlike how we typically would interview if we were doing it for the paper or for online. So we encourage our speakers to be absolutely candid as much as they can. Just to recap, previous guests have included people like Dipinder Goyal, founder of soon to be public company Zomato, Nitin Kamath, Zerodha's founder, Yashish Dhaya, founder of Policy Bazaar, Binance founder CZ, and the list sort of goes on. Tonight, I have with me two of my colleagues, the Digbijay Mishra, who too is making his debut on the show. He covers consumer tech companies, e-commerce, everything that you can think of in the tech space. And Digbijay, along with Digbijay, I have Apoorva, who's behind the ETtech logo. Hi, Apoorva.
Hey guys. Hi.
Hi.
She's been my co-host and partner in crime since season 1. Thank you, Digvijay and Apurva. I know it's been a very hectic and busy day for us. We just about made it on time. So we'll just straight up go into the discussion. Today we wanted to discuss 2021. Will it sort of be a very it'll be a seminal, all important year for Indian tech startups. All indicators so far show that, but we wanted to get investors and founders who are in the thick of things right now to discuss a little more and understand what all of this means. I mean, it's a huge, and all of this comes on the. I mean, we are kind of doing this on a day when Zomato has officially announced its IPO. It's a huge moment for everybody in the startup ecosystem as a whole. It's something that all of us, in the tech and startup industry, have been looking forward to. It'll set the tone for a number of other companies looking to go IPO. We also reported yesterday that Indian startups have raised 12 billion in the first 6 months, according to data from Venture Intelligence. That's sort of beating all previous records, and it's much smaller compared to the US data, which says that 156 billion of capital has gone into startups, with Tiger Global apparently doing 1.3 deals per day, as per CB Insights. So we're going to try and make sense of all of this: IPOs, funding frenzy, very steep, eye-popping valuations, and I have six guests with me, all of them absolutely, on the inside track of whatever's happening. Sidhartha Shah, who's the co-founder and CEO of PharmEasy, has been in the news of late for acquiring Thyrocare. Hi, Siddharth. Varun
Hi,
Dua.
Samidha.
Hi. Varun Dua, who's the co-founder of Acko. Has Bhavna come in? Or we are still trying to get her?
I think she can hear us, but
We
somehow it's just not
Okay.
working. I don't know.
Hi, Bhavna. If at any point you can get into the chat, it'll be great. She's the co-founder of 10 Club, which raised 40 million. as it's seed round. Yes, seed round. Abhay Pandey, who's partner at A91, he's somebody who actually made an appearance on our inaugural episode back in March. Hi, Abhay. Thanks a lot for doing this. Um,
Hi.
Hi. Hemant Mohapatra, partner at Lightspeed India, and Mukul Arora, partner at Elevation Capital earlier, and more commonly known as SAFE Partners. So I actually was going to start with Bhavna, but since we can't pull her in, I'm going to throw it to the other two founders on the panel, Siddharth and Varun. It's actually it's a great time to be raising, right, to be a founder, to be starting up. But both of you are sort of running companies which are in growth and late stage. um, Siddharth, would you throw some light on what, I mean, how things are looking for you from your vantage point? PharmEasy has been on a capital raising, spree in the past, 6 to 8 months. You've put that money into buying assets and a huge one like Thyrocare. Um, it's how is it looking like, and what is your plan going forward? Seeing the kind of fun, frenzy and exuberance in the market.
Look, I think it's all looking very very encouraging. You it's there's never a better time to be a startup founder in India, and I don't mean the least because of the funding frenzy. I think it's truly the time where Indian startups are able to really really solve things at scale and make those work in a massive environment, right? We went through COVID, which I think was a terrible tragedy for a lot of us, including for me personally, where I saw my mom got admitted to an ICU and all of that. But one thing which has fundamentally happened is that India has gone digital, and everybody who's there has so many opportunities to look after, right? And there are so many problems to be solved that it's just absolutely the perfect time. I almost kind of compare it to what happened in the economic liberalization of 1991. Uh, it happened because India was in a great crisis, but what happened thereafter was some of the most outstanding work across sectors. I think we are at that inflection point right now where digital is becoming a way of life across the length and breadth. I think in areas like SaaS, we are we are now second to none because mobility or travel has reduced. All people care about is a great product, and we all know that we have some of the best talent. And I think so. Whether you're looking at consumer tech, whether you're looking at B2B enterprises, which has come off scale, which if you're looking at SaaS, I think there's a lot happening right now, and I couldn't agree more that there's no better time to start in India than right now.
Okay. So, Siddharth, we're going to come back to you on a bunch of things that you're doing at PharmEasy, besides obviously raising all the capital that you have. You also have plans for an IPO, just like a bunch of other mature startups. So we're going to come back. We're going to circle back on that one. But Varun, I wanted to get you in. You too, are raising capital. We reported. I know you won't have any comments specifically on that, but uh, tell us what is driving so much of investor interest. I mean, is it only COVID kind of transforming businesses and everyone looking at digital as a must-have? And how different is this space of deal making? I mean, you've seen over the past 7 8 years, you ran CoverFox, which obviously did not have that great of a run. And now you're doing Acko. Tell me, how have you sort of seen this period, especially in the past 6 8 months?
Uh, yeah, hi guys, and yeah, it's. I share. I think partly to answer you, Samidha, I share Siddharth's view on that. It's a completely different time, but I think there are personally, I think there are two, three things driving it. Of course, there's far more maturity in the Indian consumer and the Indian ecosystem for sure. Businesses have been built, more smartly. COVID, of course, has driven more adoption, but I also think partly it's to do with the global sort of liquidity also that is available, which is driving a little bit of frenzy. So while broadly I agree that this is probably there's probably been a never been a better time in terms of capital chasing good companies and good ideas, but I think there are a lot of factors at play here: COVID, digital adoption, majority of the ecosystem, plus the liquidity at play at this point, and maybe some of our VC friends or investor friends are more equipped to answer that. But I think it's a bit of everything. I do, however, see personally, if I can present a little bit of the other side. I do also see a little bit of 2015 getting repeated. In that's at least my view. I could be wrong here. But
Yeah.
while there are better businesses being built compared to that time, for sure, there's a lot more maturity 5 years later, 6 years later. I happen to be a part in the 2015 run also, where capital raising wasn't difficult.
Right.
And I'm seeing the same thing now, but we can't compare the two equally. But I wouldn't take it to the other extreme. Also, is my view that everything's 100% rosy. I think we might see some some exuberance which may not last. Is my view at least.
When you say that, are you talking about companies not being able to kind of catch up with their valuation? And obviously, while you mentioned that 2015 was similar, I mean, I was around, you were there, most of the other guests on our panel, have seen 2015 frenzy, but are you indicating that the valuations are in a zone where it will be hard for some companies to kind of catch up on those valuations?
If I can give an honest view, my view is that either some of those companies are geniuses and I don't see their plans. That's quite possible, and I don't get it. But some of them, I just find it very, very hard to believe how some of those valuations are going to stack up. But again, founders have been known to pull off great things. Maybe they can, and I'm sure there's some merit. But some of them just astound me that how the companies which probably for years will still have to figure out how exactly are they going to monetize, or what essentially is the revenue model. And when you get into billions of dollars of valuation before getting there, I sometimes find that it might be hard for founders and the
Hmm.
early investors to catch up to those expectations somewhere. I wouldn't say all the companies are in that bucket, but yeah, somewhere I feel that it's probably with the liquidity chasing the companies, it might be getting hard to discern, the good from the great.
Okay, so I saw Bhavna there, but I don't know if Bhavna, hi, can you hear us?
Yes, I can. And this was
Wow.
almost as hard as raising funds.
Finally.
It didn't look like with that 40 million scoop of yours. And I wanted to actually, so welcome on the show. We've also started with a bit of a glitch in the beginning because we're not used to Twitter Spaces. Hopefully, should be a smooth ride from here on. But I wanted to actually start with you because that number was. Um, Literally, like 40 million in seed. I mean, what are you going to raise when you do your series A?
I uh, I have so many things to say, but I think the answer to this is one, we're not a product, right? So our journey is going to be dramatically different. I think 40 million was a number we set out, for us to kind of kickstart the three co-founders who came together. We were like, hey, this is not an ecosystem where you can bootstrap and run. So, we had to kind of craft a number that we thought would kind of fit what we wanted to build. And 40 million was that number, right? And I think while a PR splash stays out there for 72 hours and makes a lot of noise, I think what it misses is the 10 months of work that went into raising this $40 million. You know, in this business, I think again it's not a product, right? So it's an entire portfolio and a story and a dream that needs to be put down and put in place. And parallelly, through the 10 months, we were fundraising, right? So from the day we wanted to build this, the conversations for fundraise started. So I know a bunch of founders on this call. Think unlike a lot of businesses, this is not a you're forever in fundraising mode. And yeah, so that's been the
No,
story, right?
just for everyone sort of coming in, since Bhavna was not introduced, Bhavna Suresh, she's the co-founder of 10 Club. And I hate saying this so-called Thrasio model. I
Thank
hope we
you.
have some other qualifier for it. But 10 Club does that, and there are multiple other startups which have jumped into this space. I actually had a follow-up question to your, obviously your seed round, which made headlines because it was 40 million. Um, how much of the raise? While I know you're suggesting that it wasn't the easiest to kind of shore up this kind of capital. Just wanted to understand from you. I mean, how much of it has got to do with the fact that capital was available for you to raise a seed round of 40 million, or is it simply because you needed that as a capital as being the differentiator, considering you have so many other companies trying to get into this space and get traction out here. And thirdly, I mean, what is the reason for this undisclosed investor?
Again, many questions rolled into one. To answer your question, the first one about calling this a Thrasio clone, I think that's right. It's called the roll up space around the world, and that's what we are. I think we're creating a new ecosystem, and that is the roll up ecosystem. Um, Second, what was the second question? The second question was about why we raised so much, whether there was this much capital available. I think the answer to that is no, right? No one's out there distributing capital. I think while there is that misbelief, I think it's taken us a while because we have showed up strategics, right? I mean, if you kind of break it down, and I know before I came onto this panel, I had said that I've signed so many non-disclosures that I cannot talk about so many investors on the cap table. But I think that's a choice for them to make. I think they're not traditional investors. You know, they like this space, they like the roll-up space, and they believe in it deeply. And that's the reason they want to kind of stay in the shadows for a while. I think for us, if you look at the names that have kind of come and believed in us, there are a ton of partners who look at this from a strategic lens, not just capital, right? We have logistics partners who are huge and they play a massive role. They're not traditional capital lenders. We have Heyday on the table, who's actually building up the roll up model for the US. So this is an entrepreneur, right? And this is again not an investor. We have Boat. I mean, that's, I think, more for us to just be grateful that we have the backing of two individuals who've kind of built this space up in India and understand it so deeply. So for us, the time taken to raise this money was not just about 40 million, but about figuring out who to take the right money from and who would kind of walk this journey long term, right? Because again, answering that question for us, using 40 million is going to be really quick. You know, a lot of that capital is going to go towards acquisition. And while it sounds like a really large number, we believe it's going to just get us started, right? It gets us to
Right.
cross the line and make our first few partnerships.
Yeah. No, it's not your typical sort of product led
Yeah.
startup. I mean, this is sort of different. You need that capital. I'm just going to move it to the investor side. We have three investors, and I want their point of view as well. Abhay, if you can tell me, while we talk about how there's so much capital for founders at this point to raise, and it's a great time to sort of start up. How are investors sort of keeping pace in this kind of a market? I mean, it's not only about the founders. I mean, there's counter offers, valuations are doubling and tripling. If you're not Tiger and SoftBank or even Sequoia, how do you sort of stay relevant? I mean, if you look at what funds are doing now, yesterday Charate announced that sort of promising 48-hour turnaround for seed stage program. Does it all make sense? I mean,
Your question is very leading. Does it all make sense? No, not all of it makes sense. That's very clear. But before I jump into the negative side of it, because your question was leading me towards the negative side of it, on the positive side,
no,
I do
it's
think
not negative. I mean, I'm just saying that
I,
how do you sort of keep pace, as an investor
I
who's trying to be a little more sane or, kind of balanced and
more
not go all
yeah.
out, you know? Yeah.
Yeah, like to use the word thoughtful, but I'll come back to that. Um, so what has fundamentally changed in the ecosystem is the belief that the Indian tech ecosystem is producing valuable companies. If you look at until 2019, 2020, almost everybody who was not a part of the ecosystem, and this is people outside the venture capital and the founders, and that's a small set of people. People would say, "Pata nahi kya kar rahe hain." Sab bakwas hai, etc., right? And that has completely transformed this year, where everybody wants to get into a pre-IPO deal. HNIs are jumping in and out. Mutual funds want to look at every company that's there. So that view of saying the Indian startup ecosystem led by technology is creating something really valuable has changed for the better. And so similarly, the view of seasoned professionals wanting to come into the ecosystem. Earlier, the 2-year guy with McKinsey experience was always happy to jump into the startup ecosystem. But the 10-year Unilever guy or someone who's in operating roles, they were very skeptical. Now that's changed. So these two are, I think, very fundamental changes. People outside the ecosystem beginning to believe in this ecosystem. So that's the very good part
Yeah.
of it. And I think it's here to stay, as it happened in other economies. Um, your real question is how does an investor who believes they're thoughtful operate in this ecosystem? Um, and there are no easy answers to this. There is no way A91 or, for example, many other funds can compete with Tiger. There's no point trying to compete with Tiger on speed or on valuations. The only thing you can do is make sure that you are there before them, cultivate a relationship, and try to do it before them. But if you are facing up to them and you're meeting them as a competitor, it's a waste of time. And therefore, it's best to say, hey, let's wait for some time, wait for a better opportunity, look for something else, find another company, another neighborhood, think ahead because it's already hot. And a lot of things are quite hot. I mean, just an example, if you remember in 2020, Goldman Sachs came out with a report which said that the Indian internet ecosystem will be worth $250 billion by 2025. We are in 2021. I would suspect we are already there in valuation.
Right.
However, they also said that the ecosystem will have some $70 billion of revenue. Those revenues are not there. The revenues are still at the 2020 level or somewhat larger. But numbers and valuation have caught up. So does it all make sense? No. Is it directionally correct? Yes. So people are factoring it very long-term growth, very long-term domination of tech players, which probably will happen. They're also believing that the venture capital world does not deserve a 25% IRR or 30% IRR, which is what most of us promise to our LPs, saying if the cost of capital is so low, why should we get 30%? 12% is good enough.
Yeah.
And maybe that's the reality in the near term, and that's something we'll have to live with.
Yeah. I'm going to get Hemant and Mukul also to sort of jump in, share their point of view on this. And then Digbijay, you had some follow-up questions as well. Hemant?
Yeah, thanks for having me on, Samidha. I think, look, a lot of things have already been said that I agree quite completely and emphatically with. The market is clearly what it is.
Do you compete with Tiger, or it's a waste of time, like Abhay said?
Yeah, I mean, if you're going head on with a fund like Tiger that is 4x your size and can move at 4x your speed, there's no point, right? So what we do as a fund is we are fairly we actually get prepared very quickly on certain categories and certain sectors that we think is going to attract a lot of capital and really, really smart founders. And we build a point of view very, very early. We have always been fairly heads down and thoughtful as an investor because as a fund, we haven't raised very, very large funds. So our special sauce has to be different. It can't be just capital. And there are founders that are looking just for capital. These are founders that know exactly what they want to do. They don't want any interference. They don't want any board interference. They have all the steps figured out, and they just want 30, 40, $50 million at as little dilution as possible. And for them, Tiger is absolutely the right answer, and they should. That's how they're going to get successful. And then there's a large number of founders, thankfully, that for them that is not enough. For them, they do need a partner that is spending time with them, helping them build the company, helping them hire, helping them with all the strategic decisions, all the decisions that are irreversible as well as reversible. And for them, we come with the capital and we come with a bunch of other stuff alongside with it, and that's what they're looking for. So there's place for both kinds of investors. And look, the world is a $94 trillion GDP. I don't know what it is now post-COVID, but somewhere in that range. There's plenty of money to be made for everybody, founders, investors, and everybody alike. So we look for opportunities that we have very strong belief in, and then we don't think as much about what amount is required to win the deal and what valuation we're winning the deal on. We know that when you do get a home run in this business, a percent here, a percent there, even 5% here or there wouldn't make any difference at all. But then you can't do that every single time, because conviction is almost a limited quantity. You only have 1 or 2 deals in a year that you feel that strongly about. And then we go after them very, very aggressively and win them from any fund that we can, right? And we have in the past. So that's at least the way we have approached this market. It's going to come and go. The heat is going to come and go. But there'll always be place for funds like Tiger as well as funds like ours.
Yeah. No, Tiger is a phenomenon which sort of keeps repeating every couple of years. It's just that it's like Abhay mentioned. There are so many other new types of funds also which have come into India. I think, Mukul, it'll be good to get you in as well and talk a little about how competitive, and sort of progressively more competitive the Indian market has been, especially for early stage funds like you.
Sure, Samidha. Thank you for having me on the show.
Thanks.
Samidha, before I go there, actually, I just wanted to touch upon a couple of things. One is, Varun mentioned about 2015, right? And actually, I feel like 2015 was a magical period for Indian startup ecosystem. Obviously, 2021 is much bigger, but if we reflect back, right, obviously there were a lot of failures, but that was also the time when Swiggy, Urban Company, ShareChat, No Broker, a lot of these companies were founded. So it's exactly during these phases of excess when founders will try stuff that they haven't tried in the past, which seems much bolder. And obviously, by definition, the failure rate is going to be much, much higher. But some of the outlier companies will also get built in periods like this. So I think that is one.
Yeah.
Second, what is different this time? Obviously, we spoke about depth of market. We also spoke about liquidity. The other thing which happened due to COVID, if we reflect back on sort of March to June, July last year, right, and when everything was shut, everyone went hard after their cost structures. And like Abhay mentioned, there was always question on, hey, what are these companies doing? Will they ever make money? Now there are double-digit companies who are very large in terms of revenue and valuation, but also at the same time, they are profitable. Most e-commerce vertical companies are profitable. Food delivery companies in their core business are profitable. Cab hailing companies are profitable. So I think that always used to be, again, one of the questions for Indian startup ecosystem, which has been answered very, very decisively. Hopefully, it will only get strengthened over time, that these are not just GMB businesses. These are businesses which will generate cash. And once they start generating cash, it's going to be in massive magnitudes. So those are sort of couple of thoughts I wanted to add on the current macro ecosystem. Now, going back to your competition point, if we look at early stage, right, and here I'm looking at seed, series A, the number of funds has gone up significantly. But if you ask early stage founders, hey, which are the top 3, 4, 5 funds you would want to raise capital from, you will get the same names you would have heard 5 years back. So therefore, from a distance, it seems like it's becoming much more competitive. The good news is that there is
Right.
a lot more capital available for founders. But like Hemant said, if you are a true partner to early stage companies, if you are able to add value, if you want to invest, you will be able to get in. Now, obviously, we have to today move much faster than we used to in the past. I think one of the funds amongst us started doing ICs on weekends. Now all of us are doing ICs on weekends. So that's the unfortunate reality of this market. But we have to be much faster. But for the top 4 5 funds, I think we are still competing amongst us versus with the larger universe.
Got it. Um, Digbijay, you had a bunch of
Yeah,
questions for.
I wanted to, because we are having this chat on a day when Zomato has announced the plans for their IPO. So I wanted to check with Sid, and also Varun is there. I mean, what do you guys make out of this IPO plans that have finally been made public, and they'll issue the offer next week?
Yeah, I think it's a great time, isn't it, for everybody who's rooting for startups, right? I think for every company, the next logical milestone, right, once it's mature, is to go public, right? That's the test of the true waters. So I think it's a pivotal
Yeah.
moment, right? I think, look, some IPOs will do well, some won't, right? That's the nature of where things are. But for everybody who's cheering for the startup ecosystem, I think it's a great step.
What does it mean for you? I mean, Sid, you're also planning to go for an IPO in the next 6 to 18 months, as we reported. I mean, how does that impact, your plans and yeah.
Look, I think it doesn't impact per se our plans, right? But there's always a positive effect if things were successful and people accept technology companies and the way they want to change the way things are done in India, right? It only gives more confidence, right? And I think lots of
Hmm.
people had complained in the past saying that, hey, you know what, Indian startups don't give great exits. I think if these IPOs happen over a period of time, I think that confidence around exits will also significantly improve, right? And I'm sure this is more in the domain of investors, but all of these are some ways interlinked, because as more and more people get confidence in the ecosystems, uh, more and more founders will get access to more and more capital. And I think in a world where people have touched upon the fact that the cost of capital is low, I think it's great also that it's great that founders are raising more capital by diluting less, right? I mean, why should investors alone make 60, 70%, 80% IRRs or whatever, 30% IRRs, and founders be left with, like single digit or double digit stakes, right? I think maybe hopefully we'll see a time in India where there will be very good returns made for the investors, but the dilution also that founders will take will be much lesser, and some of these things will bode very well for the ecosystem.
Right, right.
That's a
Varun?
very interesting point,
Yeah.
Siddharth. Varun, what's your point of view? I mean, that's again, something which is seen across most consumer internet startups, where founders, because they've raised so much capital in their in their lifetime, that by the time they're approaching like an IPO, the shareholding is down to single digits. What is how are you? I mean, you are a sole founder of your company. How important are those things now vis-a-vis you spoke about 2014, 15 for founders who are building now?
Uh, I think for me personally, it's been journey of understanding what's important to investors, what should be important to you. I think the money that you raise and the dilution that you go through is unique to everyone, and has you have balance sheet heavy businesses like ours. You probably have less capital require businesses that require less capital, and it's going to be relatively a unique journey for everyone. But at a broader level, I do think that it's the supply demand side of the market. I think Indian founders relatively have ended up diluting a lot more. Companies, maturity of the ecosystem has, and the customer has taken time. So profitability has been relatively stretched out, requiring more capital and more dilution. I think that cycle is getting better. I think investors, with the kind of competition now that's there, at least personally I have seen that we've been able to negotiate better rights, better much more control than we were able to maybe 4 or 5 years ago. I think that's pretty critical, and I think it's the difference between 2015 and 2021, right? Where there is in much more maturity in the ecosystem. I probably back in 2015, it was hard to even talk to 5 founders and get a good sense as to what's right for you to do and what's not. There is far more knowledge available today as the ecosystem has matured, and there are founders now who are supporting other companies. So it's for me, for example, Binny is on our cap table from Flipkart. The amount that we are able to get to him of how to manage such a large company and a large investor base is and what mistakes were made at that point is phenomenal learning. Having said that, when you look at companies or founders reaching single digit stakes at the point of IPO and so on and so forth, I think that if a company is doing well, success begets success, and everybody aligns. We read a lot about even in your reporting that there are stocks getting allocated to founders pre-IPO. There are structures getting created basis how the stock performs and so on and so forth. So I don't think eventually, if the company is doing well and consumers are happy, investors are making money, and you're hitting a potentially successful IPO, these adjustments get made to a reasonable degree. Could it be better? The answer is yes. But I think most founders eventually, do it for the love of the game, and somewhere or the other, it's the control on the company or the future of it, and that's important. I think the commercials get settled eventually.
Right. Digbijay, did you have another question? Because I want to go back to Abhay and Hemant and Mukul for one more question for the investors, and then sort of open it up for Q&A.
Digbijay, are you there?
Yeah,
Did you have another question? Apoorva, do you have
yeah,
another question?
okay. Yeah, actually, it's related to what where Sid and Varun were talking. I mean, maybe Mukul, Hemant, and Abhay can join in on this. What's driving this exuberance of capital coming into Indian startups? Is it the fact that finally a lot of late stage startups are finally starting to go IPO, or is it just the whole digital adoption that is there because of the pandemic?
And just to add to that question, while
Yeah.
it's great that we have a bunch of companies going public. Say if I take the example of Zomato, I mean, one or even Paytm, these are loss-making companies, and have uh, are in very hyper competitive sectors. So if you look at Zomato, there is competition from Swiggy, which is very aggressive. It has recently raised a huge funding round led by SoftBank Vision Fund. So I mean, how does it sort of board? I know it's a long term story. You list, I mean, after your listing, sort of there's a long haul after that. But how pivotal, I mean, while it is very significant, the fundamentals and the financials will start to be increasingly more scrutinized. Are a lot of these startups and companies which are going public ready for that? And if will that kind of have what will be the rub off on the rest of the companies which are looking to go public? Abhay, you want to take that?
Sure. So
Abhay, you want to take that? Mukul?
Yeah,
sure. Happy. Go
it's
ahead, Abhay.
a set of two questions and somewhat longer answers. No one comes with this knowledge beforehand. They hire people, they hire advisors, and so on and so forth, and they learn how to manage the public markets and be a listed company. And it's not unique to India. It's unique. It happens around the world. And now we've seen many companies around the world that have been unprofitable for a long time. and still been valued very well by the public markets as long as the direction is correct. And that is saying are my margins converging? And as long as the markets believe that you are continuing on a path of dominating your market, being a market leader or one or two of the market leaders, the markets will continue to keep giving you the benefit of doubt for a very long period of time. So that's the premise under which companies are going public now. Whether 8.5 is right or 7.5 was right or will 11.5 be right, I don't. Those are functions of liquidity. But is the company well and truly established itself as one of the two market leaders in their market and will be the case for a very long period of time? That's true. Is that market a very long term? That also is true.
Mukul, you want to come in? I guess
As long as these companies demonstrate
there's a bit of a problem
those,
with your audio.
my margins are.
Mukul.
Sure. So actually, Samidha, I was going to say something very similar to what Abhay already started on. See, if you had asked this question 2.5 years back, right, on whether long term these companies are going to be profitable, are they going to generate economic value, I would have said with a lower confidence, yes. But last 18 months, the confidence has gone up significantly. I briefly touched upon this point earlier, and since you specifically like mentioned Zomato and Swiggy, I think both the companies towards end of last calendar year were EBITDA profitable, not CM but EBITDA profitable in their food delivery businesses. So they have already demonstrated that the business fundamentally makes money. And like you can't get a more beautiful market structure, right, where there is 10x growth ahead of us in this market in next 7, 8, 10 years. And there are just two players, both heavily capitalized, which will deter anyone else from entering. And now between them, where the market shares end up is one question, but irrespective of where it ends up, both will be very valuable companies. So I think, and this, will it hold true for every company going IPO? I'm not sure. Will it hold true for more than 50% of them? I think so, for sure. So I think these companies are definitely much stronger, much more mature today as fundamental businesses. And I think at an aggregate level, companies which are going IPO will end up doing very well.
I think some of the skepticism comes in from the fact that, aside of maybe a Zomato, which has had some limited sort of exposure to, this kind of scrutiny, there are others, where numbers and financials have not been so closely looked at. Which obviously will not be the case once you file your DRHP and you actually get into the IPO process. But there was one question for Bhavna, which Apoorva had, and then let's get the Q&A going post that question.
Yeah, maybe Bhavna and Hemant, both of you can take turns to answer this. With the increased valuation asked from founders, how has it changed investing in or picking early stage deals? We've been reporting about entrepreneurs shopping for term sheets. So if Hemant or Bhavna, either of you would want to take that question.
Yeah, I'm happy to sort of take it first. So the question is, with the increased valuations, how are the investors looking at it? I mean, what is changing about the investment strategy?
Yeah, and picking early stage deals with increased valuation asks from the
especially
founders.
for early stage investments, right? Like if the valuation is high, you get less stake.
Yeah, I mean, so look, well, I mean, the obvious answer is you can't win in a market that is lifted up by 20-30% by the same, with the same fund size. Either you do smaller number of investments, fewer investments, or you raise a bigger fund. So I think what we are seeing globally right now, and even in India, funds that began with their first fund at 30 million are raising now 100 million. Funds that started with 100 million are now raising 20 million, and so on and so forth. So I think that's just a reflection on where the market is. Everything is risen up by 30-40% in some categories, and maybe 100% to 200% in some categories like SaaS and crypto. So that's one way, and the other ones are like taking more concentrated bets. Instead of 20 bets. Well, bets is the wrong answer, the wrong way to sort of put it. Backing 20 founders with smaller checks and small ownerships, you concentrate your thesis areas, and you become a more focused investor. And there are more focused investment theses and funds coming up, right? Some investment funds just focus purely on crypto nowadays, and some only do SaaS, and some only do deep tech and so on. So that's another way that people are differentiating themselves. At the end of the day, when commodity becomes capital, you got to figure out what your winning strategy is. And for some, it is speed. For some, it's relationship. For some, it's knowledge about a particular category, and then everybody has their own secret sauce.
Right. Bhavna, do you want to jump in before we open it up for audience Q&A?
Yeah. So I think my answer kind of mirrors Hemant's a little bit from the other side. Right? I think for us, I can only talk about my journey. Can you guys hear me?
Yeah, we can.
Yeah. Okay. Yeah, I think for us primarily has been a relationship, right? When an investor kind of comes on and bets big, I think it's one, understanding the size, one, understanding the bet that they are taking. So there is a lot of conviction from their end. And I think one answer as a founder, the other side that's kind of gone and raised this much at such an early stage is we've kind of got people who understand this space, right? And hence the bet. So I think it is not an unknown conversation. It's been partners who've said they believe in this ecosystem, believe in the model, believe and understand what the shortcomings can be, and can potentially be of assistance through that, right? So I think that's been incredible, and I think that's the conviction with which partners jump in so early with such large checks, right? And I think the misconception here that I keep kind of trying to debunk is the time here, right? No one's kind of coming in and writing $2-3 million that they can with one IC. I think the conversation here becomes a much larger, longer one, right? So that it starts early and then they watch you operate for a while. There are a bunch of checklists that you need to fulfill before you jump into the whole piece together. So I think that's the difference with something this early. There are a lot of check marks that need to be kind of fulfilled before you jump in.
Right.
I think we have another 10 to 15 minutes. Apoorva, you'll start getting in people who have questions for everybody.
Yeah, Ayush.
Ayush.
Yeah, hi.
Ayush, you want
Yeah,
to
yeah, I
talk?
want to talk. Thanks for giving me this opportunity. So I'll be really honest. I ended up losing my
You
20% equity. Yeah, I'm
you can
audible.
just introduce yourself, Ayush,
Yeah, sure, sure.
and yeah.
Yeah, so I'm building into gaming space and just closed the seed round, and I ended up giving 20% of the equity as advisor equity. And one of the well-wisher told me that we are doing this right. But once I opened this talk in the VC world, I heard that you ended up lot of
What's your
equity.
question, Ayush? Can you
Yeah,
just make it short? Yeah.
yeah,
Thank you.
yeah. My question is about the advisory equity. Will it be a problem for us to raising the next round?
Who can take this question? One of the investors?
Mukul, I
Yeah, I
think,
can
wants to
very
talk.
quickly,
Yeah.
I
Thanks.
can very quickly answer it. No, Ayush, this will not be a problem at all. It's atypical, it's unfortunate, but it will not be a problem as long as you are executing well. Like investors who come in later will figure out a way to minimize this damage, and this will not be a problem
Thank
at
you
all.
so much for answering. Thank you.
Thanks, Ayush. Anyone else with questions for Abhay, Mukul, Hemant, Siddharth?
Yeah, Arijit wants to talk. Just 1 second.
Arijit as in our Arijit.
Arijit. Yeah, Arijit.
Okay. It takes there's a bit of a lag to give speaker rights on Twitter Spaces. If someone is here from Twitter, please take that as a feedback.
Yeah, it's taking a second to connect.
Okay. There, I can see one person like twice over, like a
Yeah.
doppelganger.
That's
Yeah,
what happened.
crazy stuff here. Okay, I think Arijit, you're a speaker. Please go ahead.
Origi, do you want to ask your question?
Maybe he's playing a prank with us.
Yeah,
He's trying to
probably.
disrupt this show. Okay, I
Why
actually
why should I disrupt the show?
I have no,
That's a
because
little.
we cover the disruptors.
That's
Wow.
I don't know. I don't know. Okay, to that. But my question actually, I would love to get both perspective from that of an investor like an Abhay or a Mukul or Sidharth, who's a founder. That but, do they feel disappointed that even though there's a lot of focus on the Indian consumer internet or the
Arjit,
start?
your voice is not very clear. There's a bit of an ambient noise.
Is it better now?
Better. Yeah, sure.
Yeah.
So I wanted to ask, I'd get the perspective of both an investor like Abhay or Mukul, as well as a founder like Sidharth, on the fact that do they feel disappointed at the fact that despite the high noon, so to speak, of the Indian consumer internet ecosystem, several latecomers in the party, if you look at the Asian landscape, started later than many of their peers in India, but now seem to be doing better, both in terms of the fundamentals as well as valuations. I mean, we're today, for example, everyone's talking about Zomato, but if you look at Indonesia, if you look at Singapore, if you look at a Grab or a Gojek, they started later than Zomato, and look at where they are in terms of the valuation. So, are we missing the tree for the woods?
Let me first try and answer here.
Sure.
They did start later. They started in 2015. Zomato started much earlier than that. But today, there's a big difference between what's happening there and what's happening here. I mean, for example, in Indonesia, there are two companies that dominate most of what goes on in Indonesia in terms of e-commerce and mobility, if you will. And put together, their valuation may be in the range of give or take $20 billion. In India, multiple companies do that, and I suspect their valuation is larger than the valuation of the couple of companies that are doing that. And this is in spite of the fact that the total purchasing power of those economies added together may be somewhat similar, but on a per capita basis, definitely much higher than India. So I don't think we should be disappointed. We should be very happy with where we are. It's that they have a more consolidated market. We have a somewhat more distributed value across companies. So we should be very happy where we are. Our outcomes right now are most probably better than what we deserve based on today's actual performance. But it's in the right direction, and at least as investors, I'm quite happy.
Okay.
So just to
Mukul?
complete the investor perspective, right? Yeah. So I couldn't agree more with Abhay, and also I would like to bring out one big difference. So already you compared consumer tech companies, but look at what we have achieved in SaaS, right? And it's still very, very early in that journey. And there is so much headroom, but we have now very firmly established ourselves on global SaaS map. And that is going to be as big as consumer internet in terms of value creation if we fast forward 10, 15 years. So I think there is nothing like, it's almost like school days, right? कि अपनी class में first आ गए, but दूसरी class में तो कोई और better कर रहा है. So let's not worry about benchmarking. Let's see on absolute terms what have we achieved in such a short period of time. And lot of enablers are coming together. So next 10, 15 years, it's going to be much, much more exciting even compared to where we are today.
Got it.
Thanks.
Thanks.
Thanks, Arijit. Arijit is a dear colleague, just in case if people were wondering why we had that banter. Is there anyone else with a question? Because I have one, and maybe we can wrap it up post that, because I want to get actually everyone on it. I wanted to, I know it's hard to, put any timeline and give a, any estimate. But I wanted to understand from each one of you, um, how long will this sort of frenzy last? And I know there is a lot of liquidity, global liquidity right now, so one can't really say anything definitively. But also, in terms of public markets, while there's a clutch of companies looking to go public, we are seeing that things are tapering off a little bit in the rally. One sort of negative event and going public may not look very smart at this point. So beginning with maybe Hemant, you can sort of talk a little about it. But I mean, where do you see things going from here in the next 6 months? Because I mean, we started off discussing how 2021 is looking like it's going to be extremely important and seminal for everyone in the tech and startup space. Uh, any guesstimate in terms of how long this party will last, and what is the significance of so many companies looking to go public in a situation where one-off event may just lead to a bear market?
Yeah, so look, I think a really quick answer on this one. As long-term investors, we look at a 10-year horizon, and we sort of plan accordingly. What has happened in the last couple of years, I think it's once in a generation kind of an event, clearly. And what we are seeing, at least in this market, in India and Southeast Asia, in China, in the US, and in Europe, where we all have offices, is that there is an acceleration that seems to be fundamentally at a different level. What used to take several years in other markets has taken a few months. In just the last 1 year, right? So what we think is going to happen is the future is arriving much more quickly. More and more companies are building faster towards larger outcomes in shorter periods of time, and more people are now willing to spend more money online, which is good for the ecosystem. And then on top of that, you add this whole speculative markets that has been going on in the US, because quantitative easing has given everybody a bunch of extra capital to spend. There is absolutely some sort of frenzy and froth across both public markets as well as private markets, and you are certainly going to see some cool off period in the next 6 months, maybe in a year or so. But fundamentally, it's all pointed to the north and the right. That's what we believe. There is no underlying thing that is concerning us right now, like you could sort of argue around 2007 or 2006 for the big financial crisis. At least not something that we are observing anywhere in the world right now.
Got it. Okay. There is somebody who wanted to ask a question, Apoorva. You made Nitish a speaker.
Yeah, Nitish, do you want to go ahead? Introduce yourself and ask your question, please.
Yes, ma'am. I'm a student, computer application. I wanted to ask if Indian social media platforms have any chance among world, like Facebook and Instagram, because we have seen after TikTok many had emerged, but now they are all like after Instagram reels, they have faded away.
Mukul, you want
What is future for Indian social media?
Right. Maybe Mukul can take that, considering Saif is very active in that space.
Yeah, elevation. So we were early investors in ShareChat, and Nitish, what we are seeing across both their products, ShareChat and Moj, is very, very encouraging. One, obviously, in terms of user growth, engagement, etc. And there we benchmark, like if I look at engagement and retention, we benchmark their metrics with global best-in-class social networks, and they are right up there. And again, what is even more encouraging is on the monetization side, where the progress has been very, very strong over the last 12 months or so. So I feel, and now I think, given some of these horizontal platforms are becoming much larger, there is an opportunity for people to think of, hey, are there niches, are there verticalized plays which we can think of? So there is a company which is in the religion, spirituality, content space, which we are partnering with. So we are very, very bullish on the overall social and content opportunity.
Thanks, Nitish, for your question. Apoorva, we're going to take last thoughts from Abhay, Varun, Siddharth, and Bhavna, and
I
sort of
think
wrap this
Bhavna
up.
had to just leave.
Okay, she had a hard stop. Yeah, okay.
Yeah, yeah.
Siddharth, Varun, Abhay, Mukul, last thoughts. Hemant obviously had a bunch of things to say on my question previously, but if you guys can also talk a little about what next, and how much of this exuberance is going to last and for how long. Varun, you want to go first?
Sure. Uh, if everyone knew that or someone knew that, that would be great. But that's where the trick is. But I think more at a broader level, I think the next 6-7 months more from the couple of IPOs that we are expecting, whether Zomato or at least the ones that I've heard about from coverage, which is either Policy Bazaar or Nykaa or Delivery, or I think they're going to be quite,
That one will be
yeah.
important for you, right? Policy
Which
Bazaar, it sort of sets the
uh
some sort of benchmarking for you.
No, for us, so we're manufacturer of insurance, so there are listed insurance companies. Thankfully, I don't compete in a duopoly, Zomato, Swiggy kind of world, which I shudder to think how
Hmm.
you. So for us, I'm happier in a non-winner takes all market personally. But so there are comps available, but I just think more from a tech startup ecosystem. If 5, 6 of them do well or reasonably well, or even if, like Mukul mentioned, if we have a 50% plus hit rate when we say that these companies have done well
Right.
in the IPO, maybe not all, maybe at least 50-60% of them do. I think it'll be great. Maybe some frenzy might come down. We also see the frenzy happening with uh, uh, let me, I don't know what words to use, but we have some of these hedge funds which come every 2-3 years, and then they go back and watch their portfolios, and it kind of settles down for a year or two.
Yeah.
So I think a combination of these factors might play out, but I think the momentum at a broader level might continue very well if some of these IPOs, or more than 50% of these IPOs do well. I think the momentum will get sustained. Is at least my view. Maybe some froth will come down, but broader directional level, I think it will continue. But if these is a black swan event, or most of these IPOs don't do well, I also think that at this time, one important thing that we're missing with these IPOs is that the retail investor is the consumer of that company.
Hmm.
Maybe so young investors, maybe they want to own a Zomato stock. It's not necessarily always about the fundamentals. I think that's going to be. I'm not saying Zomato's fundamentals are bad, but I'm just saying that companies getting a longer lease of life to prove their leadership in the market could be very, very different. So I think it's going to be interesting next 6-7 months. Broader level, I think the momentum might continue unless there's a fourth, fifth wave and some more black swan events.
Hmm. Abhay, your take in terms of the second half of the year, is it going to be more of the same?
For now, it's very difficult to predict anything otherwise. So I would predict more of the same. In fact, some more exuberance building up.
On the
But
back of, on the back of.
on the back of these planned IPOs, pre-IPOs, and then further higher up pre-IPOs and so on and so forth. So, and more money coming in. So we're seeing a lot more money coming in into India in the near term. So don't see any reason why this will change. We are in the 11th year of a longest bull run ever in history across the world. People have been calling for a decline in the market over the last 3 years. And I don't see it happening till middle of next year when the first signs of tightening will happen. So
Hmm.
that is before that, it's unlikely that anything will change in a meaningful way. And as far as India is concerned, I would be more optimistic because, and especially for the tech ecosystem, because if you think about it, in the US, the purchasing power came first, the internet came later. In China, they both came together. In India, purchasing internet has come first, and purchasing power is going to come. And therefore,
Right.
the ability of the internet-led, technology-led companies to dominate the users who have the purchasing power before very serious offline competition sets in is much more than rest of the world. And therefore, over the longer term, more and more power will go towards technology companies in India. Their share should be higher than both in the US and China over time, because many users will start spending their money on the internet first. So long term, very good. Short term, who the hell knows? Next 6 to 12 months, nothing should change.
Great. Very encouraging for everyone who's an entrepreneur here trying to raise capital.
Yeah.
Siddharth, what about you? I mean, you obviously are in an overdrive, raised bunch of capital, looking at acquisitions. What next for PharmEasy in the next 6 to 8 months?
I think for PharmEasy, next 6 to 8 months is just keep head down and execute. Right. I think we've kind of pretty much consolidated our position across what we like to call four structural parts of the outpatient healthcare ecosystem: information, consultation, tests, and treatment. I think the focus now is going to be to put all of these together in a single intuitive, user-friendly, consumer-facing interface, right? So that job is easier said than done. So we've got a task ahead of ourselves. The great thing is that each of these engines by themselves are working beautifully well. They are working at scale. Now we have a task ahead of us of putting all of these in an integrated manner, right? If our history is anything to go by, we've been able to do some of these things beautifully. We've done almost close to 30 plus roll-ups in our history, and barring a couple of, most of them have turned out very well. So that's what we're going to be focused on
Right.
for the next 6 to 8 months.
Great. Mukul, last thoughts on the next
So,
6 months and how 2021 will sort of pan out?
so there, Samidha, I 100% agree with what Abhay said. If at all, it's only going to get more intense versus things slowing down. Having said that, like if I look at it from a founder's perspective, right, I'm assuming many of our listeners would be founders. I think it's also hard to predict a black swan event and when that happens. So as a founder, if you are not diluting too much, there isn't a better time to raise capital. I would like, typically we would suggest founders should raise for 18 to 24 months. In current market, I would say raise for 36 to 48 months, so that if there is to be a correction and we will not be able to predict when it will be, you will have long enough runway, and that's exactly the time when you will have the capital and you can keep executing well. If this craziness goes on for another 24 months, you can keep topping up. So that's the only suggestion I would have for founders. But beyond that, it's very, very hard to predict right now.
Great. I think we will keep track of everything that is happening. And like all of you are suggesting, it's going to be more of the madness, so more busy days for us. But thank you, all of you, Abhay, Mukul, Varun, Siddharth, and Bhavna, who's left, and Hemant as well. Thanks so much for taking out the time. And we'll obviously also wanted to thank everyone in the audience. We tried Twitter Spaces today. We had a bunch of glitches in the beginning, but hopefully, everyone who has more questions, they can DM, etc. Get the speakers and the guests to kind of answer. We've run out of time, but you can stay updated with stories by subscribing to our daily newsletters, Morning Dispatch and Top 5. You can also follow us right here on Twitter for all news and updates. See you next week. Thank you, everybody, and have a great weekend.